What's fascinating is that during the big market drop on August 5th, when the NASDAQ was down over 5% early in the day, Bitcoin also experienced a significant move. Interestingly, Bitcoin touched the same level as it did during the spot ETF approval rally, which preceded the 20% correction in Bitcoin. Essentially, we retested a key technical support level that was once resistance. In technical analysis, this kind of retest is crucial. It shows that a previously broken resistance level is now acting as support. Along with this, Bitcoin is moving within a parallel channel. When you see a move like this, it is referred to as bullish consolidation. Essentially, the price is making lower highs and lower lows, but it's staying within the upward trajectory established during the previous rally, which took Bitcoin from its low all the way up to $74,000. This pattern indicates that despite some corrective movement, Bitcoin is consolidating within a bullish framework. The fact that it's holding above key support levels suggests that the broader uptrend is still intact, and this consolidation could be setting the stage for the next move higher.
What's fascinating is that during the sharp market drop on August 5th, when the NASDAQ was down over 5% early in the day, Bitcoin also made a notable move. Specifically, Bitcoin touched the same level it reached during the spot ETF approval rally before experiencing its 20% correction. This means Bitcoin effectively retested a critical technical support level that was previously resistance. This retest is significant in technical analysis as it often signals that a former resistance level has now become a support, confirming the strength of that level. Bitcoin is currently moving within a parallel channel. This is a classic bullish consolidation pattern in technical analysis. Essentially, despite making lower highs and lower lows, Bitcoin's price remains within the broader upward move that began from its previous low and extended all the way up to $74,000. This kind of consolidation indicates that while there has been some short-term corrective movement, the price action is staying within the confines of the longer-term uptrend. Bullish consolidation within a parallel channel is a positive sign for Bitcoin. It suggests that, despite recent volatility, the market is digesting the prior gains in an orderly manner, without breaking down. This often sets the stage for the next leg higher in the uptrend. The key here is that Bitcoin has successfully held above critical support levels, reinforcing the idea that the broader upward trend remains intact. For investors, this pattern is encouraging because it shows that Bitcoin is consolidating in a healthy manner within a bullish framework. As long as it stays within this channel and holds above the support levels, there's a strong likelihood of continuation in the uptrend, making this a key level to watch for the next potential breakout.
Subscribe our channel and press the bell button to get our video notification. And like the video.
Looking at Bitcoin's historical price action, we can see that every time it hits a certain resistance line, it tends to pull back. So in the short term, if Bitcoin reaches $69,000, it would be wise to watch for a potential pullback. However, if Bitcoin can break through that level and push beyond $74,000, which is close to its previous all-time high, the upside potential could be significant. In fact, I wouldn't be surprised if Bitcoin goes quite a bit higher, even reaching $100,000 within the next year or two. While Bitcoin enthusiasts might hope for this milestone to happen sooner, I believe that $100,000 is a realistic target in that time frame. Bitcoin is gradually establishing itself as a different kind of asset, one that is less correlated with the stock market and more aligned with traditional safe haven assets like gold. This shift is a sign that Bitcoin is maturing and gaining broader acceptance as a store of value. Bitcoin's evolving role as a less correlated asset suggests that it may serve as a hedge in the future, similar to how gold has functioned for decades.
Looking at Bitcoin's price history, we notice a consistent pattern every time it hits a significant resistance line. It tends to pull back. So in the short term, if Bitcoin reaches $69,000, it's worth watching to see if it pulls back again. However, if Bitcoin can break through that level and surpass $74,000, its previous all-time high, it opens the door to potentially significant upside. I wouldn't be surprised if Bitcoin goes much higher. And while some may hope for it sooner, I believe that $100,000 is a realistic target within the next year or two. This gradual rise toward $100,000 is part of Bitcoin ES evolution. It is slowly becoming less correlated with the stock market and more aligned with traditional safe haven assets like gold. This shift is essential for Bitcoin AS long-term potential as it transitions from being seen purely as a speculative risk asset to a more stable store of value. As Bitcoin gains broader acceptance and begins to play a similar role to gold, its price could continue to rise. The less it moves in tandem with risk assets and the more it mirrors gold's behavior, the more it will solidify its place in portfolios as a hedge against uncertainty. This shift in perception is crucial for Bitcoin's future, and as this narrative continues to build, the likelihood of Bitcoin reaching $100,000 becomes more tangible. Bitcoin is maturing into a digital store of value, and as it gains traction in this new role, its potential for breaking through previous highs increases. Investors should keep an eye on these key levels as Bitcoin's journey toward $100,000 is part of its broader evolution in the global financial system.
The recent breakdown of the dollar has been a crucial factor in market dynamics, particularly influencing gold and Bitcoin. The dollar's decline has reinforced gold's role as a safe haven asset. Central banks have been buying gold aggressively, which is always a strong signal. As institutions that control the money supply, their buying patterns suggest that gold remains a key asset to watch. If central banks are increasing their gold reserves, it's a sign that individual investors should consider following suit. Reflecting back to our discussions from late December and early January, I mentioned a target of $2,500 for gold, predicting it would be one of the best performing assets. While Bitcoin may still outperform gold for now, gold has indeed outperformed the SP 500 this year. The weakening dollar has contributed to this upside in gold alongside the central bank's shift in buying behavior and the Fed's approaching decision to cut rates. The broader concern is that the U.S. government debt continues to rise even during periods of economic expansion. Typically, debt is expected to be reduced during expansions, with increased spending occurring during recessions.
The recent breakdown of the dollar has been a key factor influencing both gold and Bitcoin. As the dollar weakens, gold has emerged as a prominent safe haven asset. Central banks have been buying gold in large quantities, which is a significant indicator of its importance. These institutions, which control the money supply, are signaling confidence in gold as a stable store of value. If central banks are increasing their gold reserves, it's a strong signal for investors to consider gold as a strategic asset. Reflecting on our discussions from late December and early January, I had projected a target of $2,500 for gold, anticipating it would perform exceptionally well. While Bitcoin might still lead in terms of performance, gold has indeed outperformed the SP 500 this year. The weakening dollar has been a key driver of this upside. A broader concern is the rise in U.S. government debt, which continues to increase even during economic expansions. Traditionally, debt levels are expected to decrease during good times, with higher spending occurring during recessions. However, we're seeing the opposite trend. The national debt is rising, and if a recession occurs, government spending is likely to increase even further, with the Fed potentially loosening monetary policy. This deviation from traditional fiscal and monetary policies raises concerns about the sustainability of U.S. debt and overall economic stability. Investors are responding to these concerns by seeking assets like gold, which are seen as more reliable in times of uncertainty. The trends in both gold and Bitcoin reflect a market sentiment that questions the reliability of current fiscal and monetary policies, emphasizing the need for careful investment strategy and diversification in response to these macroeconomic shifts.
Subscribe our channel and press the bell button to get our video notification. And like the video.